Suddenly Turkey's in focus. I mean, have you had to ratchet around your models? Is Turkey a systemic worry right now?
I don't think so. I mean, there's always noise out there with the emerging markets. And I mean,
I guess 42% decline in the equity market and the currency at an all-time low against the euro is maybe more than noise.
I mean, certainly the U.S. markets have generally taken it in stride. I mean, obviously, markets are down a bit this morning, but we're talking less than 0.5% on the S&P 500. So, I mean, obviously, all these things ultimately depend more on what the economic effect of any single country is. It depends more on what the effect is on markets and confidence, et cetera. And I mean, I think so far it's not.
If you had to rank the risks, is it China, is it tariffs, is it the ECB, or is it the U.S. Fed?
Well, I mean, I think in terms, the Fed is trying to slow things down. I mean, I think the economy is growing too fast relative to its potential right now. Unemployment is low and still falling. We're starting to get some bubbling
too
in the
fast
inflation numbers.
To me, you're saying inflation's a threat.
Well, I mean, yes. I mean, the inflation, we're going to get the CPI, of course, this morning. Now, they're still very tame numbers, but even if you look at the core CPI, it's running 2.3%, which is very tame. But a year ago, that number was 1.7. The wage numbers, same story. They're still quite tame in terms of rate of change, but they're up. The private sector ECI wage number, it's at its fastest rate since 2008. Again, they're very tame numbers, but they're starting to move up. Unemployment looks like it's still trending down. So obviously the Fed at this point is trying to slow down employment growth at least. I mean, we keep getting 200,000 a month in employment, and unemployment keeps falling.
Trade warmongering, the impact of has been fairly muted so far. Do you expect it will continue to be so?
I mean, it obviously depends a lot on where this all goes. If it keeps escalating, where retaliation leads to retaliation, to retaliation, to retaliation, et cetera, then that is certainly a risk that becomes a negative. We're hearing a lot of worries about it in the comments section of the ISM reports and such surveys, but the data themselves are still quite strong.
So no data, is there any hard data impact from the trade fears so far?
It doesn't look like
there's a lot of talk, if then but nothing has actually happened.
At this point, the hard numbers have held up quite well. I mean, even yesterday's jobless claims number, a very broad indicator, 4-week average back to its lowest basically since 1969.
Are we over-focused on it? Are we over-worried about it?
No, I mean, I think this can become a big issue. And so far, the tariffs are very tiny. I mean, obviously, there's another round potentially in September with China. But at this point, the tariffs are covering a very small part of trade.
Like a good pilot, can the Federal Reserve, led by Jay Powell, bring us down softly?
I think it's a challenge. I mean, obviously, the history of the Fed is there was effectively a soft landing in 1994, but almost every other Fed tightening cycle has resulted ultimately in a recession.